Picture a world where the most powerful decisions aren't made in parliaments or boardrooms, but in the quiet, opulent halls of private estates. What if the tides of global wealth, wars, and empires were steered not by kings or presidents, but by a handful of families whose names rarely surface in history books? This isn't a conspiracy theory. It's a story woven through centuries, hidden in plain sight, about how international banking families crafted the architecture of our modern economy from the shadows. This video dives into the intricate web of finance, power, and influence, exploring how a few dynasties shaped the world we live in today. From the rise of merchant bankers in Renaissance Europe to the intricate financial systems that underpin global trade, their legacy is both profound and elusive. Why does this matter? Because understanding their role reveals the invisible threads that connect money, power, and history. Let's step into this story, not with suspicion, but with curiosity, as we uncover how these families operated and why their influence still echoes. The seeds of financial power. The story begins in the bustling markets of medieval Europe, where trade was king, and money was starting to talk louder than swords. In the 15th century, Florence was the beating heart of commerce. Amid its crowded streets, one family rose above the rest: the Medicis. They weren't just bankers. They were pioneers who turned lending into an art form. By financing kings, popes, and wars, they didn't just earn wealth, they earned influence. The Medici Bank funded the Renaissance itself, bankrolling artists like Michelangelo while securing political favors across Europe. Their ledgers didn't just track gold, they tracked power. Consider the audacity of it. A family of merchants, not nobles, dictating terms to monarchs. When King Edward IV of England needed funds for his wars, it was Medici gold that kept his crown afloat. But this came at a cost. The Medicis didn't just lend money. They wove a network of obligations, ensuring their influence stretched far beyond Florence. Their story shows us the first blueprint of how finance could shape history. Not through force, but through the quiet precision of balance sheets. Across the Alps, another name was rising: the Fuggers. In Augsburg, Germany, Jakob Fugger, known as the Rich, took banking to new heights in the 16th century. His family's wealth came from silver and copper mines, but their genius lay in finance. Jakob lent millions to Holy Roman Emperor Charles V, funding wars and securing monopolies in return. He didn't just bankroll an empire, he practically owned it. When Charles V defaulted on his loans, Fugger's grip on Europe's economy tightened, proving that even emperors answered to their bankers. What makes these stories remarkable isn't just the wealth, it's the system they built. The Medicis and Fuggers didn't invent banking, but they perfected the art of leveraging money to control outcomes. They funded wars, shaped trade routes, and influenced who rose or fell in power. Their banks were the first global networks, with branches from Lisbon to Vienna, connected by letters of credit and private couriers. This wasn't just business. It was the foundation of a new world order, where money moved faster than armies. The shift to global influence. By the 17th and 18th centuries, the stage was set for a new era. Europe was no longer a patchwork of feudal kingdoms, but a chessboard of empires, and banking families were the grandmasters. Enter the Rothschilds, perhaps the most storied name in financial history. Originating in Frankfurt's Jewish ghetto, the Rothschilds built an empire not through conquest, but through precision. Meyer Amschel Rothschild, the family's patriarch, sent his 5 sons to Europe's capitals: London, Paris, Vienna, Naples, and Frankfurt, creating a financial network unmatched in its reach. Their genius lay in speed and secrecy. During the Napoleonic Wars, the Rothschilds' private couriers outpaced military dispatches, delivering market-moving news before anyone else. In 1815, Nathan Rothschild in London received word of Napoleon's defeat at Waterloo, hours before the British government. He used this edge to manipulate the stock market, buying low and selling high, cementing his fortune. This wasn't just clever trading. It was a masterclass in turning information into power. The Rothschilds didn't stop there. They financed Britain's war efforts, stabilized currencies, and even helped fund the Suez Canal. Their influence wasn't about flaunting wealth, but about embedding themselves in the machinery of nations. When Britain needed to buy the Suez Canal in 1875, it was a Rothschild loan that sealed the deal, giving Britain control over a vital global trade route. The family's reach extended beyond Europe, touching the Americas and Asia, as their banks became the backbone of international finance. What set the Rothschilds apart was their ability to operate across borders while remaining untouchable. They weren't loyal to one nation, but to their own network. Their wealth wasn't just in gold, but in relationships, with governments, monarchs, and later, industrialists. This was a new kind of power, one that didn't need a throne or an army, only a ledger and a reputation for reliability. The machinery of modern finance. As the 19th century unfolded, the world was shrinking. Steamships crossed oceans, railways connected continents, and telegraphs carried news in hours, not weeks. Banking families didn't just adapt to this new era, they defined it. Their influence moved beyond lending to kings and into the very structure of global trade and industry. The Rothschilds, still a towering force, were joined by new names like the Morgans and Rockefellers, whose wealth and reach would reshape the modern economy. Take the House of Morgan, born in the United States but with roots in London's financial world. Junius Morgan, and later his son J.P. Morgan, turned banking into a colossus. In the late 1800s, J.P. Morgan didn't just finance businesses, he built them. When railroads, the arteries of America's industrial boom, faced chaos from overcompetition, Morgan stepped in. He merged rival companies, creating giants like the Northern Pacific Railway. By 1901, he orchestrated the formation of U.S. Steel, the world's first billion-dollar corporation. This wasn't just banking, it was sculpting an economy. Morgan's power peaked in moments of crisis. During the Panic of 1907, when America's financial system teetered on collapse, it was Morgan, not the government, who rallied bankers to stabilize markets. He locked Wall Street's titans in his library, refusing to let them leave until they pledged funds to save failing banks. The irony? This private rescue led to the creation of the Federal Reserve in 1913, a central bank meant to prevent such crises. Morgan's influence didn't just save the day, it reshaped the rules of finance. Across the Atlantic, the Rothschilds continued their quiet dominance. They financed Britain's colonial ambitions and America's industrial growth, often working behind the scenes. When gold rushed into California in the 1850s, it was Rothschild agents who ensured the metal flowed to London, stabilizing global markets. Their network wasn't just financial, it was diplomatic. They mediated between nations, their neutrality making them trusted middlemen in a world of rival empires. The invisible empire expands. The 20th century brought new challenges: world wars, economic crashes, and the rise of nation-states with their own central banks. Yet banking families adapted, finding ways to thrive in a changing world. The Rockefellers, rooted in oil through Standard Oil, became a case study in diversification. John D. Rockefeller's fortune didn't just build skyscrapers, it funded universities, medical research, and global philanthropy. But this wasn't charity for its own sake. It was a way to shape public perception and secure influence in new arenas, from education to policy. Consider the Rockefeller Foundation, established in 1913. It poured millions into global health and agriculture, but it also positioned the family as architects of progress. When the League of Nations needed funding, or when post-war Europe required rebuilding, Rockefeller money was there, quietly steering priorities. This wasn't about flashy power, but about embedding influence in the world's institutions. Meanwhile, the Warburgs, another banking dynasty, played a pivotal role in shaping international finance. Paul Warburg, a German-born banker, was a key architect of the Federal Reserve. His vision of a centralized banking system brought stability, but also concentrated power. The Warburgs, like the Rothschilds, operated across borders, their loyalty not to one nation, but to the flow of capital. During the interwar years, they financed Germany's recovery while advising American policymakers, a delicate dance that kept them at the heart of global finance. The Great Depression tested these families' resilience. While markets crashed and millions lost everything, the Morgans and Rothschilds weathered the storm. They had diversified their wealth, gold, real estate, art, and their networks spanned continents. When governments needed loans to rebuild, these families were ready, their capital filling gaps that public coffers couldn't. The 1930s saw them pivot toward new industries, like energy and infrastructure, ensuring their relevance in a world of rapid change. the legacy, and the shadows. As the 20th century progressed, the role of banking families became less visible, but no less potent. The rise of central banks, multinational corporations, and global institutions like the IMF and World Bank shifted the spotlight. Yet behind these structures, the fingerprints of old dynasties remained. The Rothschilds, for instance, advised on privatizations in post-war Europe, from Britain's railways to France's energy sector. The Morgans and Rockefellers shaped Wall Street, their banks merging into giants like J.P. Morgan Chase, which still dominate today. What's striking is how these families operated with discretion. They didn't seek headlines or thrones, they sought leverage. Their wealth wasn't just in vaults, but in relationships, with governments, industries, and each other. The Rothschilds married into European aristocracy, the Morgans into American elite circles, creating dynastic alliances that amplified their reach. Their story isn't one of conspiracy, but of strategy, exploiting the gaps between nations and markets to build an invisible empire. This brings us to the heart of their legacy. The global economy we know, interconnected, complex, driven by capital, wasn't an accident. It was shaped by families who saw money not as an end but as a tool to mold history. From the Medicis funding the Renaissance to the Morgans forging America's industrial might, their influence spans centuries. They didn't rule the world, they financed it, and in doing so, they set the terms.